Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Tuesday, the 20th of January. Starting off with the FTSE 100, which peaked just above the top of that rising trend channel from February. The black line there around, suppose the line there was around 102.20. Current situation is that yesterday's feared bearish divergence in the RSI window has led to a 1% fall on the FTSE, so at least the charting worked. We were looking for this market to hopefully find support around 101.60 if we were lucky, but we weren't. And the current situation is that we're looking for the floor of that rising red channel there from October around the 10,000 levels, so basically 10,000. The psychological and technical support at the moment. Below 10,000, we've got the nightmare scenario. We move down to the 50-day line, 98.28, but hopefully we'll manage to avoid that. The reason that we might avoid it is that the RSI is still at 58 and still above the neutral 50 level, which is a plus at the moment. Ideally, we bounce at or above neutral 50 on the 0 to 100 scale. Moving along to the situation at the DAX, and here gap down again today, which is rather painful. We're back below the old October resistance, 24,700. While there's no end of day close back above that, looking for the 50-day moving average, 24,200, which is all rather disappointing and rather negates any chance of a move up to the best case scenario target 27,000 by the end of next month. Looks like the Trump stresses and strains that we've had have upset the markets. Obviously, he normally chickens out, but before he chickens out, the markets tend to fall, and then he will do so. Moving along to the Dow, and I believe it was closed yesterday, but we can still have a look. Here you can see that we're in a range there between 48,800 and just shy of 50,000. Got an uptrend line there, which is around the 49,000 level. Below that, which I suspect we might go, then it's the floor of the range, 48,800. Worst case is the 50-day line, just under 48,000. But the RSI was looking good and has been looking good. So if we do get that Trump bearishness coming in, it will snap a pattern which has been there for a couple of months in a positive way. Moving on to the cryptos, and starting off with Bitcoin, which has done almost what we didn't want it to do. So it was a bull trap through 95,000, and then going very close to testing the 50-day moving average at 90,000. Let's call it 90,400. If we're lucky, we won't need to touch the mark, that 50-day line, and we'll bounce from here, go back to the top of the range, 95,000. Otherwise, an end-of-day close back below the 50-day moving average. And we've got the chance of hitting that uptrend line from October 2024 at 86,000. So generally rather disappointing on Bitcoin. RSI below neutral 50 now as well, is at 47, is also not a great look. Next up is Ethereum, and here similar pattern to that of Bitcoin, and here you can see the differences though that we've actually touched that 50-day line there, 3089. Potential buying point for aggressive bulls, and those would be people who would be hoping for a move up to 3,300 plus, while we're above the 50-day moving average on an end-of-day close basis. So maybe today's the day for potential trade. Uptrend line there from back in April is at 3,007. So if there is a loss of that 50-day moving average, then 3,007 the place for this market to go. Moving on to gold, which has been the star attraction for many weeks and months, and continues to be so. We were looking for 4,800 by the end of next month. The way things are going, looks as though we might get it by the end of this month, which would be quite a coup. In fact, that resistance line projection there from November 24, now heading towards 48, well, basically 4,900, which is now our end of February target. Upside valid, certainly while we're above recent support there around 45.40. Ideally, there's no end of day close back below the latest gap floor, 46.20. Moving on to the stocks, and not many today, so I suppose not surprising given the way that we've got this 1% fall on the FTSE 100. Starting off with the Aterian, and just the first glimmers of hope of a turnaround. What's interesting here is we've had lower lows for January, but the RSI stayed the same, so that's bullish divergence. Probably want to see an end of day close through 25 pence to give us a potential target up to 35 pence by the end of next month. 35 pence, the 200-day moving average. End of day close back below 23 pence. Obviously, the recent lows would negate a potential upside scenario. One of the most hard done by stocks around has been Arrow Exploration. I think it was sort of competing with Eco Atlantic in terms of being in a horrible situation, but Eco obviously has risen to the stars. What you can see now is that we had a gap higher for Arrow back in December, and we've had another gap now. It looks as though the worst is over, and we could head up to 17 pence, which is the top of that broadening triangle there from the beginning of August. The other thing to note is that we've got an uptrend line in the RSI window, and we bounced above that. So basically, above that 50-day line at 12, looking for 17 quite easily on Arrow. On to Block Energy, which I've described as always the bridesmaid, never the bride. But in this case, we've actually had a gap through with the now rising 50-day line, and we've also managed to get up to the 200-day moving average level, 0.87. End of day close above the 200-day line. We're looking for the top of the range towards 1.15 pence by the end of next month. Surprise rebound here for the situation at Eden, and here we've got a situation where the top of the range was our target. Obviously, we had that resistance line target there, 4.25, above 4.25. Looking for the next level up, which should be hopefully towards 6.25 pence, which was resistance on the way down at the beginning of last year. 50 and 200-day lines are both rising now, so it looks like this recovery will have legs. I haven't looked at the funding circle for a long time, but a great update today. And what will be interesting is that we can hold above the old November resistance of £1.40. Above that, looking for up to £1.70 by the end of next month. It's a punchy call because we could just sell off into the strength today, and it could be a bull trap. But at the moment, still a chance while we're above 140 to get up to 170 as a best case on that. Moving on to genedrive, which managed to announce potential for a fundraise, 6 million fundraise. Rising trend channel base here, top of the channel there, up to 1.5 pence. That's what we're looking for, while we're above the 200-day moving average at 1.02 pence. That's also basically the floor of the rising trend channel. Orcadian, from memory, is a company involved in the North Sea, so it's rather surprising given that the Labour government basically wants to close that down, that we're rising because of net zero, etc. But previous target there at 18 pence has been hit. Above that, we're looking for the upper parallel of that rising trend channel from the summer of 2024. That's heading to 35 pence. We're looking for that perhaps as soon as the end of next month. Moving on to Reabold, which has managed to keep its recovery, or hold on to its recovery for the first time in a long time. We managed to hit our second target there at 009. Above that, looking for the shares to hit the upper parallel of that rising trend channel, well, the upper parallel of that target line there at 009, up to as high as 0.17, and to do so by the end of next month or even sooner. Ideally, we stay on the right side of 0.11, whatever happens. Surprising winner, it comes in the form of Scancell, and here we managed to hit our target there at 13.5 pence. Above that, looking for the upper parallel of that rising trend channel base from back in March, and that should be up to 17 pence by the end of next month. Ideally, we stay on the right side of recent broken resistance just above 12 pence. That's it for me today. More updates tomorrow.